Hi, it's Gail with Traders Help Desk, and in this presentation, I'm actually going to walk you through a trading strategy that I use on binary options, and I call it pivoting into profits. These are the candlestick formations that I use in this strategy. First, we have the doji, and the doji must occur at a high or a low. If it is, for example, an inside bar, you would not use it. It must form either a new high or a new low. The next pattern is called a 3-bar reversal to the downside. And as you can see, this center bar right here, it forms a high when compared to the bar before it and the bar after it. So it sort of makes a little peak here. Now, this pattern is stronger if this third bar here closes below the low of the pivot high. So in this case, it's telling me that the next 3 bars will more than likely be down. That's exactly what I want to see at an area of resistance. Then we have a 3-bar reversal to the upside. You would want to see this bar formation at an area of support. The center bar is the lowest bar, and then the bar after it is actually higher. Again, if this one closes above the high of the pivot bar, then this would be a stronger formation. This tells me that the next 3 bars should go upwards. Then we have an engulfing bar, and this would be an engulfing low bar that tells me the next 3 bars should go up. And again, because this closes above the high of this bar, it is a very strong signal that the next 3 bars will actually go up. We also have an engulfing bar off of a high that tells me the next 3 bars will go down. So you can see that this bar here actually exceeds the high of this bar and the low of the previous bar. In other words, it engulfs it. And the close of the second bar is below the low of the prior bar. Again, that indicates that the next 3 bars will go down. Exactly what I want to see. Now, memorizing the candlestick formations is the hardest part of this trading strategy. The rest of the trading strategy is actually very simple. First, you put the daily pivots on your trading time frame. Then, because we do have the binary option expirations, what I do is calculate 3 bars in my direction is what I need. So if I am looking at a 5-minute chart, I would trade a 20-minute binary option. If I'm looking at a 15-minute bar with the pivots, then I would go out to a 2-hour binary option. If I'm looking at a 60-minute chart, then I would be trading a daily expiration. Or if I'm looking at a daily chart, I would go out to a weekly expiration. You do have to wait for price to reach an area of support or resistance. That means it will either be at a pivot line, support line, or a resistance line. Then you wait for one of the 3 candlestick formations. Again, it would be a doji, a 3-bar reversal, or an engulfing pattern. Once you have that criteria met, you enter one strike price out from the current price. Okay, now that we have the trading strategy guidelines, let's look at a couple of examples. This is one on the Euro US dollar. You can see the pivot line is here. And at point A, we have made a high. The next bar does close down. It is lower than the previous bar. Point A is higher than the bar prior to it. You can also see, and this is just something I would notice, that the prior day had resistance in that area as well. So we have the 3-bar reversal right at the pivot line, and I enter at 1.1540, which is one strike price out. Now, this is a 15-minute chart, and I am anticipating price to go to point C. But I also anticipate it going lower, so I have actually went out on a 4-hour binary option. It's actually a daily expiration at 7 a.m. The risk per contract is $36.25, and I'm trading 10 contracts for a total risk of $362.50. And what happens? Remember, we are at point A over here where we have formed a high and it's given us a 3-bar reversal. Price does move in my direction. It goes down to test the support line just as I anticipated. Then it bounces back up to test to ensure that the pivot line is actually going to serve as resistance. It does, and what happens? It goes down, it breaks through the support line, comes back to test it, and it closes in the money at 7 a.m. That gives me a $63.75 profit per contract, or $637.50 trading 10 contracts. Because I believed that this would break this support area, I did buy time, meaning instead of using the typical 2-hour binary, I actually went out 4 hours to allow this binary to work in my favor and do exactly what I anticipated it would do. This morning, I did one on the Japan 225 index. You can see it is at the pivot line, gives us a nice 3-bar reversal to the downside. This is one that's very, very strong because this bar closes under the low of the pivot high. I go out one strike price to 18,850. Price does move down, goes deep in the money before expiration, so I maintain the binary and I let it close in the money. As you can see, I was risking $37.25 per contract, again trading 10 contracts for a total risk of $372.50. The payout at expiration was $627.50 trading 10 contracts. Per contract, it would have been $62.75. This is a very easy trading strategy. I love to use it on the higher time frames. I just like higher time frames more than shorter time frames. But as you can see, it would work on any time frame because you're using the power of candlestick formations with support and resistance.